So let's do a roundup of the Black Diamond Trader for the brand new year, 2017. We're going to look at the normal pairs that I've been covering since I started making these videos. I'm not switching them out, just using the same ones over and over again. I might add some as opposed to taking any away. But that's what's great about the Black Diamond Trader is it will tell you what markets are, decent for trading. And we're going to start off here at the Euro US dollar daily chart. I'll look at a few 4-hour charts using the major pairs. Okay. We'll just quickly run through this first. You can see here, Black Diamond Trader tells you that the trend strength is down. You can see that by looking at price action, that it's down. This blue dot here is a change in the trend from up to down. I'm sorry, from down to up. This yellow dot here tells you, what, things are still conflicted, stand aside. But down here as well, you can see where we're below our blue trend strength line. You wouldn't be taking any trade in through here at this point right now. Anyways, we did get a short setup, a couple of them here. Well, let's just move over here. This is back in December over here. So this is December. And if you just take this one short here, it does go for about 50 pips before it stops you out. But now we're getting into the holidays, and not usually the best time to be trading. USD, CHF, same thing here. We had some long entries back in December, but again, we're going to ignore those simply because it's the holidays, right? You get very, trading's never very good coming into the holidays. And it doesn't really matter if you did take this long trade here on the 20th of December. I talk about, even though the instructions say to use limit orders, so you're looking for pullbacks into here, I use stop orders. So when this blue dot forms, this blue dot will form when the previous candle closes. So when this green candle here closed, this dot shows up. And then you would put your order here, and if price came back, you'd be taken in the trade. Well, the way I'd say to trade it is use stop orders. So you would see this blue dot. You would know, okay, wait till close of day if you're trading daily charts, for example. Buy stop the high. You would not get into this trade. The next one you would get in this trade, and it rallies, 33 odd pips. You would be targeting up here, up in this area right here. But if we're getting into over the Christmas holidays, you would not be in that trade anyhow. This is on the 23rd, 24th. No, that's the 26th. Sorry, right there. If you're trading over the holidays, then you should rethink your plans. So we're just waiting. We did see a short setup here. Not really a short setup, but it's called the primary short trade, as you can see there. And what that means, it's the first time we've changed the trend. You can see down here, this yellow dot formed as well, which basically tells you to stay out. And just look at the chart. You can see that the chart is, we've got a congestion here. It's just chopping back and forth. So that would have kept you out of this trade as well. Pound US. Let's crunch it up a little bit. We do have on the second, I don't know what that is there. Can't really see it. We do have a short trade on this green candle here. You would get triggered in on this trade here on the second. It goes down for a little bit. It's a small little trade because you target the support level just below it. So you'd eke out about 61 pips. Nothing to sneeze at depending on what you're trading. Then we got this short trade set up here. And it actually drops for 219 pips. But if you're looking for a target for that, we have a previous support area over here. So this trade here would have banked you 170 pips right here on the pound US daily chart. US dollar, Japanese yen. Strong trend strength up in here throughout December. If you look up in here, though, it gets pretty choppy. Down here, you can see that we're losing trend strength. And again, we did get a short setup here. Yellow dot means time to move aside. So no trade there. Euro dollar, pound. We got a long trade here. Problem is the trend strength's really low on this trade. This is back in December. No, sorry. This is actually the 4th. Then we get told to get out here, exit your long trade, so you would have made, briefly, 50 odd pips before you got out. But remember, it's going to not always be, these are indicators, right? So they're going to lag price. And that makes sense because after you see these kind of candles here, you can see the open is down here, the close is here, so we rallied all the way up here. It put in a tail, so if you're looking at candlestick charts, it would have put in a tail right there. Let me just switch over. You see the tail there? And this is usually a bearish signal, right? Price falls, finds support, and rallies up. But generally, when you see these kind of moves, right, look what happens here. It flattens out. So you would have made something on this trade. You would have been out before it hit the full target on that, which would be 120 pips roughly. But you know what? This is what's going to happen. You're going to miss out on some of these trades that go well, but you're also going to miss out on the trades that go absolutely nowhere by following the rules. Actually, I got 2 euro pounds. That's weird. Let me just close that one. Don't need that one. New Zealand dollar. Again, just where we are right now. We've got from a downtrend to an uptrend right here. Get out of your trade. So you wouldn't even got in this trade, even though it's starting to rally up. Let's see what happens after it gets up to this side here. This is great about using daily charts, right? You're not glued to your screen all day. Aussie, New Zealand dollar. Again, even though you had a short setup here, again, it's you got to remember where we are. You don't just take signals blindly. Trend strength is down. We're to the holidays still. We get a long setup here, which is the primary long trade. But if you look down here, our trend strength is really, really weak. It's 8. We need it to be higher than that. We need it to be 20, 25. And you would not be in that trade either. Not necessarily a bad thing. If you look what happened here, if you just look at pure price, you have this trend line that was broken. Let's see what happens if this move is going to continue up or we're going to turn back to the downside. And finally, let's look at the euro Japanese yen. Yes, I trade price patterns actually. What do we have here? Not too much, right? Not too much going on here as well. We do have some long setups here. We had a long trade here. Valid to take. Targeting the opposite highs. We get as high as 80 odd pips, which is pretty much right up to here, right? As soon as you start seeing that, you don't want to be giving back all of that. If you think about it, a lot of traders will say, well, my target's here, my stop is here. The problem is, if you're risking, let's just use round numbers here. Let's just say I'm risking 100 to make 200, right? And I've rallied up 180. Well, am I really going to let it come all the way back? No, because I'm already up 180. So to make that extra 20 to get to 200, I'm going to risk the 180 and my original 100. Makes no sense. So you got to start managing your positions when you get close to your targets, right? Targets are just targets. They're not always going to be hit. Let's just drop down to some 4-hour charts here. Just on the, what do I have? I got the pound and I have the euro 4-hour. Okay, we'll look at those because they're the majors. What do we have? We have some short setups. Don't trigger. Remember, stop orders. We use stop orders below the lows. If we're looking to go short, we go into a consolidation area in through here, right, which means low trend strength. Up here, we're still trending, but look what happens here. We change to the upside, but we don't have a trade set up, and we are below our trend strength, which is fine because look what happens. You get this big capitulation to the north. Price pulls back. Long trade. You might have got triggered in on this trade right here. Let's be fair. Right here, depending on where you put your entry order, the entry on this is 0618. It would have got in on 0610. So it depends if you're looking to clear the top of this high, whether you got taken that trade or not. Long trade here kind of plays around a little bit and then rallies up to your target of 78 pips right here. Long trade doesn't trigger. We turn over to the downside right here. If you take these trades, you might find yourself at times below trend strength like you do here. You see here, we're below our trend strength. We don't take our short. We have a long setup here. But again, our trend strength is still below our blue line. So we have had 1, trade go in our favor here. You may or may not have gotten triggered into this trade depending on where you put your stop order. Why, we're talking pips here. You know, a handful of pips, whether you got taken in or not. Depends on a few factors there. Let's just look at the pound US 4-hour chart. What do we have here? Let's go back to January. We have a long entry, no trigger. Change over to a short. No trade. We're below our trend strength. We got a long trade to the upside. We're below our trend strength. We're looking through here. We got a long trade here. Buy stop the high. No trade. Long trade here. Buy stop the high of this candle. Price never gets there. No trade. We turn over to the downside here on this candle here. We're still below trend strength. No trade. We have a short trade right in through here. Right here. You can see it barely, but it's there. On this green candle here, we short this. Our trend strength's in our favor. A short to the first support line gets you 55 pips. And this one here, remember, that's a further to the left on the daily chart, a support. So if you took it all the way down there, you've got 76 pips on this one. Long trade here. Doesn't get triggered, but you don't get into the trade. So if you just see what we just saw right here, we either didn't get into trades, right? Or that one that was marginal, whether you would have got in or not, depends on where you put your order to go long on that previous trade. The trades out on the 4-hour charts, they're good. So overall, just in the, we're on the 12th right here. Not a bad way to start the year. Either you're standing aside, depending on what chart you're trading, or you're getting some profits. Not bad. Click below. Grab the Black Diamond Trader. I think you can still get it for a week for $1, I believe. Give it a shot. See what you think. I'm a higher time frame guy. I don't trade this very often. I'm going to be straight up with you. I think it's a great strategy. I trade more price patterns. I don't really use indicators such as this. But for traders that need a more mechanical approach with not as much subjectivity, I think it's a solid way for you guys to trade. But as always, you know, huge disclaimer, do your own testing. And I don't suggest anyone trade, to be quite honest with you. But if you got to trade, you know, make sure you're really looking at your strategies that you're using and that they fit how your personality, for one. You know, I like higher time frames. You know, patterns are better on higher time frames. Some of you guys want to day trade. I'm not too much a day trading, especially in the spot market. If you think about it, you know, let's say you're paying 2 pips for each trade. You take 5 trades a day, that's 10 pips, right? Just to place your trades, depending on how much you're trading, you know, that can get pretty pricey. So for me, on Forex, you know, mostly Forex and commodities is where I look. Anyways, click below, sign up, and have a great year. I'll be back.